Hello and welcome back to my weekly real estate market update. I hope you're having a fantastic week. Today I'm going to share with you some property market cycles and why I believe we're still in the expansion stage, a growth stage of the property market here in Australia, and why that might mean that property prices will continue to rise over the next few years. So stay tuned if you're a property owner or potentially looking to enter the market. This might have some relevant information for you. As always, you can check out the full blog and relevant charts, etc. at martinuzzi.com.au. So my name is Lee. I'm the founder director here at Martinuzzi Property Group based on the Sunshine Coast, and I'm part of the EXP Group, an international brokerage firm with now 90,000 independent brokers across the globe in 24 different countries. So let's get right into it, shall we? So the property clock is the first one I want to bring your attention to. So the property clock shows where our market is in at the particular time. So there's 4 stages to the clock, and that is a recovering market, the peak market, which is the top of the clock, a declining market, and then the bottom of the market, or a stagnating market. Now, in the clock I've shared this week, we can see that most markets here in Australia are reported to be in that recovery stage. So why is that? Why are we now in a recovery stage? Well, there's a couple of factors that influence this chart. Number one is the seasons in Australia. And some would say that spring is that recovery period. The peak of the market is summer. A declining market is autumn, leading into a stagnating market during winter. And this really relates to the amount of activity that we see in those seasons. Probably more paramount in our southern states and our southern neighbours. Up here on the Sunshine Coast, I find the market a bit more balanced because the weather doesn't change as dramatically. However, whatever the case is, if most markets are now in a recovery stage, that wouldn't relate true. Yes, there might be less activity, but we're still saying that, hey, we're in a recovery stages. It's likely that prices will improve from here, and the market's going to improve from here as well, at least in most markets across Australia, with the exception of a few. So check out that chart at my website there as well. So the other influencing factor here is supply and demand, very big influencing factor right now, and I've talked about this plenty, that we know that there's a huge amount of population growth in Australia right now, and there's a severe shortage of properties available to purchase. There's a severe shortage of homes available for people to move in. So when supply outweighs demand, we see a declining market or a stagnating market. And when demand, like at the moment, outweighs the supply, we see a climbing market and we see a peak market, and that's what's happening now. Now, the outlook for the supply in Australia is very glim. It doesn't look like there's a huge amount of new property developments coming to Australia in the next few years. And by the time it takes place, a few years will probably pass. And that population is expected to continue to increase, which is why I think we're still in a recovery stage. Now let's look at the 18.6 year property cycle. Now this is a chart that's historical, over 100 years or more, and it relates to the stock markets and also the property markets. Now, I've included some charts that are more US based, and I think in my experience and my understanding, and I'm not an expert in this field, but I believe that usually we follow the US within 6 to 12 months. So you can probably push out some of those dates slightly as well. Whatever the case, what we saw in 2001, we saw an expansion phase. Now it's the second expansion phase of the 18-year property cycle. So in 2001, we saw this second expansion stage start. In about 2008, we saw the market drop fairly significantly. Now, I wasn't operating in real estate back then, but for what I hear, it was very slow moving. Property prices were dropping fairly significantly, and that period lasted for about 4 years. And that's historically what has played out in the past as well. So we saw about a 4-year period of price stagnation or fairly severe decline. In 2012, we started to see things pick up. Now, that's the start of the first stage of expansion, and that goes again for about 7 years. And we did see that run here in Australia. You can look at some of the charts I've provided there, where you can see property prices slowly climb over that 7-year period till about 2019, 2020, where we saw a bit of a stagnating market again. Things slowed down, things paused for a little bit, and then boom, we had the COVID boom happen. And that lasted for, again, about 2 years. We saw property prices significantly rise here in Australia by about 40 to 60% in that period. And then we saw a slight dip. Now, the slight dip is really related to the RBA getting involved and rising those the cash rate. So interest rates went up and everyone got a little bit wary and uncertain about things. But in all essence, the economy is still quite strong in Australia. There's a lot of uncertainty right now. But the other underlying factor which plays a big part in this is that supply just can't keep up with the demand at the moment. So now we started to see the recovery market happen again. And for the last 15 months here in Australia, we've seen prices climb. Gradually, but surely still climb. And I think it's about 9.5% year on year here in Australia for property price growth. So that's fairly significant growth, right? Now, this means that we're going to see another few years of growth according to those charts, the 7 years. And that will lead up until about 2026 or 2027. So we can expect property prices to continue to climb from here. And based on the outlook for future supply and the increasing demand, it looks like that, yeah, that's what we should expect. Now, there are other factors, natural disasters, wars, global economies, things like that, that may affect what happens in this chart, and that'll obviously influence that. But in a vacuum, the chart would make sense to play out until 2026, where we can see property prices continue to climb. However, will they climb dramatically again? I think everyone expects this to happen again because you get excited when you see what just happened in the COVID boom, but it's unlikely, right? Now, if I look back at the last second phase expansion cycle, and that was between 2001 to 2008, we saw most of the growth happen in the early part of that. And then after that, property prices were still firm and good. They didn't drop. They probably increased slightly, but there wasn't as much movement. So that might be what we see happen here. We've seen that initial growth phase happen very quickly, and now we might see just a gradual climb in prices over the next few years, before a potential decline in the market again. So that's my market update. Hope you've enjoyed it. Make sure you check out my blog again. If there's anything we can help you with, give us a call.